And we're live. Welcome everybody to the Steptoe and Johnson studios here at 1 PPG in Pittsburgh, Pennsylvania. My name is Dan Garcia. I'm one of the attorneys here at Steptoe and Johnson. And joining me is
Jason Staley, a shareholder of Schneider.
And before we get into this webinar, I do have to give a disclaimer, being that he's in finance, I'm an attorney. We can't live life without disclaimers. I do want to stress that today is going to be 98% educational, maybe 2% entertainment. We're not providing any kind of legal, financial, investment, or professional advice, and any views and commentary are strictly our own and not necessarily reflective of our firms, clients, or any affiliates that we work with. If we do reference any company, utility, developer, etc., it's only an example to discuss data centers and their ecosystem, and please don't take any mention of these, any mentions as being an endorsement, recommendation, critique of that company. I do want to stress that every project is very unique. So if you have specific legal, financial, or operational questions, please feel free to give either Mr. Staley or myself a call. So with that being said, we'll go ahead and just jump right in with background of data centers. Jason, if you want to kick off a little bit about your side there.
Yeah, I think it's, from my perspective, I think it's really interesting that a kid from Texas and a kid from Perry, Ohio are talking about data centers. My hometown is the home to a nuclear power plant that's owned and operated by Vistra, and obviously Texas being the state where I think most Americans think about our energy, and whether it's natural gas, whether it's oil, or for those that were unaware and started watching Landman. I think that it's kind of there's a certain kind of full circle moment for us, and I think when I think about the history of data centers, I think about it kind of if I were to explain this to my mom or dad, it happened in kind of 4 generations, right? So there was the first mainframe computer, the big stack that took like a forklift to move it, and you think about it with really big military scientific projects, right? And then you kind of gradually move into like the personal computer, and I think that when I get in front of some of my younger colleagues or less, we talk about like the dial-up internet and the 28.8 modem, and that kind of was like the second generation, right? The personal computer, and then you had this it kind of transitioned into what became kind of the era that was .com, but these kind of separate data centers that were maybe hosting your AOL searches, your internet searches, and then now we're kind of in this hyperscaler cloud, these large data centers run by these cloud computing and hyperscalers, and we're kind of into those were the kind of the 4 big ones. And now we're moving into this 5th boom, if you will, or this 5th phase of data centers. And I think that's where this conversation is we're going to spend a lot of time, is that how these things have evolved, and some things that decisions we've made as a country that we're going to have to sort of rectify along the way in order to make sure that the promise is realized.
Yeah, those are really good points. And it's funny you talk about the history that way, right? There was a hockey stick in technology development as it grew. So I'll talk about from the energy side, right? Yeah. Where we are, I guess, in the last 30-something years, or I guess since the mid-70s, we haven't really built large-scale power, right? And in fact, there's been a big shift over the last 30 years due to greenhouse gases, due to regulation, where fossil fuels and fossil fuel-powered plants were the thing that we were trying to phase out, right, as a national energy policy. And so that supply to feed that demand started diminishing, right? We started seeing an atrophy of energy getting built. And again, now we're here, right? We're seeing an increase in demand, because it's not just these hyperscalers that are increasing demand, but it's also, you look at states like Michigan, California, they're getting rid of those natural gas or gas-fired appliances and replacing them with electric, right? There's increased electrification in urban areas like Baltimore, Pittsburgh, New York City. That's a significant amount of demand that's popping up. And now we have our hyperscalers, right, increasing that demand as well.
And I think the sheer velocity, right, of the hyperscalers and the capex that they're spending, I think that is where what makes this kind of conversation so topical is that they're even surprising analysts that follow these companies with an additional $50 billion to $100 billion of spending just this upcoming fiscal year, and the outlays that they're going to be spending. And I think that what is interesting, and I think where we're going to spend, when you think about, the what their plans are relative to what our capabilities are, it kind of goes to this idea of you'll hear a lot of, we're going to talk about it, but behind the meter, front of the meter, how are you going to meet these power demands? Because I think that people will hear certain CEOs. We'll do the lawyer thing. We'll just say certain CEOs. They throw out 10 gigawatt power plants, and I think people think it's like a $10 bill.
Yeah.
Like I don't know that they necessarily that the average person understands how much power.
It's significant.
What is needed for to generate 10 gigawatts of power, and so I think that to your point about addressing. I think addressing the grid, addressing the kind of the investments that we need moving forward is going to be critical. And I think that's where I think if you could spend some time talking about front of the meter, behind the meter.
I sure can. And you know what, when you say that, like the 10 gigawatts, when I first started seeing the kind of interconnection demand that's coming online or that's planned to come online, I feel like Doc Brown in Back to the Future when he's screaming about 1.21 gigawatts. But that's what we're looking at. We're looking at a tremendous amount of power, right? And we'll talk a little bit about front of the meter versus behind the meter, because I think those are very important terms, and especially when trying to figure out a viable solution for making this happen, right? And again, from a historical perspective, you look at what utilities, the ISOs, right? That's the managers, and I'll use PJM as an example. PJM manages 13 different states. They're the wholesaler for energy, and they're the ones that distribute the energy, right? In these 13 states. And so you look at historically, they're taking a look at their forecasts, and they're like, okay, 5 years out, 10 years out, 8 years out, we're looking at maybe single-digit growth in our plan, right? But then you look at what it is today. That growth is now double digits, and it's a lot quicker, right? Where it's like, oh, these guys want to, these companies, they want to be connected 5 years from now, 3 years from now. They don't want to wait 10 to 15 years to make these things happen. And so that's where behind the meter and front of the meter comes into play, right?
Yeah, and I think that when you look at the kind of the published research that's out there, in 2024, the data center energy power usage, so the compute, right? We're going to throw compute out there a lot. It's, I always feel like it makes me sound a lot smarter when I say compute. It's kind of this thing that's just kind of out there in the future. But you talk about the compute that AI, these hyperscalers or these artificial intelligence companies are using, roughly 7 gigawatts of power in 2024. And the projections based off of kind of the average projection says that in 2034, it's going to be in the high 70s, low 80s in terms of gigawatts. It's something like a compound annual growth rate of like 25 to 30%, depending on the projections. It's an incredible amount of energy that we're going to consume and to power the grid, and how we power the grid, and how we're able to not only help AI reach its full potential, which I think has obviously has a lot of business implications, but also national security implications. I think we're going to talk about, but also make sure that the Garcia family, the Staley family, and everybody else in Pittsburgh, has the ability to live their life in a way that the powering your electrical bill, your gas bill aren't going through the roof, right? Eating up more of your family budget.
Right, and that's an excellent point, and I guess that segues into the current state of AI, right, and where things are today, and it's really, and I'll speak from I guess the regulatory perspective, from the legal perspective, right, and what we've been seeing around the country. You have PJM, California ISO, ERCOT, MISO, which is the Midwest ISO. They're trying to figure out ways to meet that demand via interconnectivity, right? They're trying to develop policy that allows for interconnection to happen when it's supposed to happen. Now, these data centers, because of the type of power they're drawing, it puts them in a conundrum because they only have X amount of supply. There's increasing demand, and like any first-year economics student would tell you, sometimes there's gonna be a gap, and if there's a gap, then we're gonna have a very bad day. And like you said, we want to. Most everybody doesn't really know where their power comes from. They just want to walk in a room, flip on a light switch, and the magic happens. But it's not that easy, right? And it's incredible the amount of work that a lot of these companies do to make that magic happen. So that's where we get the front of the meter versus behind the meter, if you want me to get into that a little bit. So I like, we don't really think about our grid or our electrical or our power scheme, energy scheme here in the US as being two competing grids. And there really are two competing grids, right? We have a natural gas grid, which is a significant grid. We are blessed with having a significant amount of natural gas here under our feet and here in Pittsburgh. And there's also the electrical grid, right? Where there's, you've got the transmission lines, you've got power utilities, et cetera. Well, for these hyperscalers, what they're looking at is they're looking at these two competing grids and thinking, okay, if I have a demand, if I'm going to take a load of 500 megawatts, the utility can provide me with 200 megawatts, and that's still significant, right? But how am I going to meet that gap? And the solution is oftentimes behind the meter, right? Maybe building a cogeneration facility that takes in that natural gas. And you've got companies here in Pittsburgh that supply that natural gas, that are very good at supplying via pipeline. But then you look at it from the federal regulatory side, getting the gas out of the ground, getting the gas transported, right? Now you got to deal with FERC. You have to deal with PHMSA. Those are just on the federal side. But now you have the state regulatory agencies that also govern how to transport that gas. And then they're storing it, producing it. And then there's all of the permits and filings that you have to do with FERC, that you're going to have to do with the state regulatory agencies to make that happen.
Yeah, and I think it's important. So there's obviously these two competing grids, and I think that there's two ways that we get our energy, right? And I don't think the average person really, to your point, really knew where they were going. They just wanted, like you said, I came in, you come in, you want to flick on your computer, you want it to work really well, and you don't want any latency issues. And that's just us, right? And for these hyperscalers and the three big, the OpenAIs, the Anthropics, Gemini from Google, and XAI, right? So, which is now, I think, part of SpaceX. Latency if it's a big issue for us, it is the most critical issue for them. And I think one of the things in the State of the Union that President Trump started to address was this idea of, these large users of energy are going to have to come up with solutions on their own. And what that means to the layperson is he's talking about behind the meter solutions, right?
I would say so, right? And it's almost like bring your own generation, right?
Okay.
Right. We plenty of restaurants, BYOB. For a lot of these developers, it's going to be bring your own generation. Okay. And so they're looking for solutions, and it could be that get natural gas powered cogeneration facility that's attached to one of these hyperscalers. It could be solar, right? I mean, these facilities are large. They have significant, acres and acres of warehouse space that's filled with these racks. Lots of solar potential there. And then you've got battery companies that can store that solar energy. And so now you can have a pretty reasonable partnership, right, with PJM, your local utility, with bigger transmission companies like AEPs of the world, right, where you can now have some type of all of the above solution to support that without increasing those rates on the consumer. Because I think that's one of the biggest concerns from the state regulatory side and the utility side is, okay, well, if we're going to have this type of connectivity, what is that going to do to the large CNI rate class? What's that going to do to the small CNI rate, or small commercial and industrial rate class? And what's that going to do to residential rate classes, right? And those are significant concerns, and they're not, I don't think they should be overlooked.
Yeah, I think that to your point on the scale, I think when we talked about in the beginning about the history, so you had the main, the big data center was a mainframe, and it was probably used by, I think the NSA, the National Security Agency, was in place. So we have that, they're in Fort Meade is what I believe is where they're believed. I'm sure that they had a dispreponderance of mainframe computers, and that was like the original
Dr. Strangelove computer, right?
The Dr. Strangelove computer. By the way, if there's anyone under like 40, we just like lost the audience. But I think that that was just one place, and it was I think that was so far out of mind. Now, if you're living outside of these major metro areas, these facilities are very large, right? And so there's from an investment perspective, you've got to identify the land, buy the land, and typically now you want to buy the land close to where these close to where the power sources are, which I think if you're in Western Pennsylvania, and I think we want to see this economy continue to grow, I feel like very blessed. I think that the economy for the greater Pittsburgh area, this is a really exciting time to be a part of it. But you've got to buy the land, and then you have to to go through all of the legal, regulatory, environmental scoping of that land, and then you have to figure out how are you going to connect this. And then I think that's where that idea of like these two competing grids. And so when these data centers are coming through and they're getting announced, to your point, a lot of times they're announcing this demand without having a data center built yet, right? This is the capacity that we will need.
Right.
So the demands on the grid right now, they're just trying to gobble up everything they can while they're developing these data centers. And I think that's where you talked about the hockey stick growth. That's the hockey stick growth is going to come. It's with 7 gigawatts, and you think, okay, well, that's not that much relative to what we put out. Okay, well, it's going to go from 7 to 82, and our lives are not going to get any less. We're not going to use the grid any less than we already do. In theory, we're probably going to use it a little bit more. And I think that kind of that we're going to use it a little bit more part is a part of when we think about the overall kind of investment landscape. We think there are kind of three or four big things that we need to think about. The first is this idea of deglobalization, digitization, reimagining our energy policy, and I think the fourth one was a kind of how are we going to power it, right? And where is that electrification going to come from? And the deglobalization you're starting to see come across all of was happening started a couple years ago, but this idea of reshoring our manufacturing and industrial capabilities, and because we cannot afford to, as a country, fall behind, right? We have to continue to lead, to innovate, so that our economy continues to be that has the strength that it has to do. And so that's why we're bringing our economy right now is what GDP is 70% services. That's going to change. And when we were talking beforehand, you brought up a really good point that I hadn't really thought about, which was this idea of you had well past NAFTA, which was passed in 1993 under the Clinton administration, the North American Free Trade Agreement that really started to opening up our trading with our Canadian neighbors and our Mexican neighbors, most significantly. But before that, we were kind of moving manufacturing to areas where it wasn't as where it was more cost competitive, right? Cost competitive. What is that? What is the impact? So like that first part of this idea of deglobalization, we're moving all of this manufacturing and industrial capability coming back. It's not going to come online right away, but maybe talk a little bit about that, because that was something that I hadn't really thought about. But data centers are going to play. They're kind of going to be. There's the AI implications, but there's also a lot of other implications, uses for them, and why we're going to need to see more of them.
Right. And bringing the manufacturing back into the United States is definitely going to increase that energy demand. And now you've got a competitor to those AI data centers, to the hyperscalers, right? Because manufacturing takes a lot of resources, takes a lot of energy, right? And we offshored a ton of manufacturing over time, and we tend to do that. We look at lithium, for example. The lithium battery was invented here in the United States, which is amazing because that's who we are, right? We're innovators. Right. We invent the the lithium battery, but guess where it's built? It's built in China and Vietnam. We don't build lithium batteries here, but we have sizable lithium deposits in the United States, in Oregon. You've got companies like Westwater Resources down in Alabama that's got lithium processing. You've got significant, abilities to take care of those kinds of things, but we just haven't brought the manufacturing side here. And I think that's when that does happen. Like you said, it's not going to be overnight, but when it does happen, now you're going to have another competing draw for that energy, and that's going to create some challenge.
And I think that when we think about the idea of deglobalization, it's going to, you don't kind of reverse engineer 40 or 50 years of economic policy and have it go perfectly. But what I think because of the importance of the U.S. maintaining its first mover advantage, right? So China has DeepSeek, right? That's like the big competitor to our three dominant models, right? So whether it's OpenAI, XAI, or Anthropic, right? That's the big competitor right now to the American models. And in order for us to make sure that we are not only kind of making sure that we have all the best access to it, a lot of that means securing our production, right? Yep. And so it's the big reason that you're seeing a lot of semiconductor chip facilities being built in places like Arizona, and because we need to make sure that we have to have our supply chain. So I think from an investment perspective, that's, if you're looking for reasons to be excited about economic growth, it's maybe not, if the artificial intelligence is a little bit hard for you to wrap your head around. And trust me, I read some of this and it's just 98% of it goes over my head. But there's a lot of economic activity that's going to be kind of a second order effect of it that I think is critical, and it goes back to part and parcel with this idea of deglobalization and digitization is energy security. And the energy security for me is a reimagining of energy policy that I think should bring us together, because it really has to be all of the above. Right. And I think it ties in, it does tie in with that front of the meter, behind the meter. In order to power, we don't currently have the ability to power all of the ambitions of our hyperscalers.
No, we don't. I don't think we do. And by that, I mean, so a couple of weeks ago, I took a look at, I guess, the number of applications that have been sent into the California ISO. Right? And I was taking a look at just, because I was bored, but it's a significant amount of applications that they received. Now they've got close to, I want to say, they've got quite a bit of connectivity already, and I can't remember the exact amount that it was, but it was looking to like almost double what it is in the next 5 years, easily. And that's a significant amount. That's a significant amount of demand. And again, we're talking about from 24 gigawatts, 24, 25 gigawatts, somewhere in that range, looking at 38, 40 gigawatts, in the next few years. And that is a tremendous amount of growth. And for these hyperscalers, power, you're right. We just don't have the power out there yet, right? And I'll caveat that yet, right? I was reading yesterday that there's a micronuclear power plant that fits on the back of an 18-wheeler truck that could be mobilized, right? I think that's wonderful technology to be able to use. It's not, it's still fairly new technology. It's not a widespread technology, but I think one of the benefits of having the situation that we're in now is it's going to create innovation, right? There's going to create more innovation. You've got students right now at CMU that are probably going to develop some type of way of deploying energy to help support the demand that's coming.
So kind of as we think about kind of transitioning to what the challenges are, to kind of recap, kind of the high level status of data centers is that we probably are underbuilt relative to demand. We are scaling up as we speak in terms of how we're trying to build them. That build as we try to get these things to come online, that's going to come with a lot of there's investment questions around it. There's legal and there's certainly some assurance in terms of how are you auditing all of these things. I think the one thing that we can say is that what AI, the data center demand coming from AI, we are going to, if we don't invest appropriately, we're going to face some of the fears that have come out in the headlines, right? Which is, are we going to have to turn off our lights so that a data center can get powered, right? So that that they can run their large language models on the backs of us, turning off our lights or not having air conditioning. So,
and I'll tell you that those developers and hyperscalers, they're cognizant of that. And I think one of the things that they're working really hard to do, and I've seen, I can't remember which company, I think it might have been Google, saying that they were almost volunteering to pay a little bit extra in rates, right, so that it offsets whatever happens to residential and small commercial industrial customers. So I think they're very cognizant of what their impact to the grid is, and I think they're going to take mitigating strategies. But also state governments are looking to do that as well, to figure out, okay, how can we take? Because right now you've got residential, small commercial industrial, large commercial industrial, and then there's a big question mark for these hyperscalers. Are they really a large commercial and industrial, or are they something else that should be categorized differently, right, and financed differently? And if you're a hyperscaler and you start thinking about, okay, where am I going to get my power? You can start thinking about power purchase agreements, right? Yeah. And here's another thing. A lot of these hyperscalers that are publicly traded, and they're talking about their power purchase agreements, now they've got to figure out, am I going to do a tolling agreement, a physical PPA, or a virtual PPA? Because guess what? Each one of those is treated differently in Sarbanes-Oxley reporting. Right. So if I'm going with the virtual PPA, well, now I got to talk to my finance folks and think, okay, well, this might be treated as a derivative, not a lease like it would in a physical PPA. Mm-hmm. So maybe my reporting has to shift, right? And so those are new problems or new challenges, I think. Yeah. But again, with professionals like me and you, we can tackle those.
I think we can. And so from if we're going to look at the challenges going forward, I think I'll take the first the first crack at what I see as a big challenge is the aging of the current grid. Yeah. And you can look at when storms roll through, our grid can go down. If you look in places like your home state of Texas, they've unfortunately had some really bad winters, and their grid has been exposed as something that is, I think, in need of upgrade. For me, I think it's nice to think about how we're going to build all these new fancy data centers that are going to do a lot of wonderful things for our country. What I'm worried about is the current grid. Are we going to stress it out so much that we don't even get to that, right? So I think the first challenge facing data centers, I think, is upgrading our current grid. Yeah.
Well, sub challenge to that, right? Sub bullet, I guess, mm-hmm. to your point, is the supply chain for the equipment and supplies needed to do those upgrades, right? If you take a look at just transformers, there's I believe 1 or 2 companies in the United States that make those transformers and that even work with the type of metal that's used in those transformers. So, we often talk about those that are going out to find the gold, but they're running out of picks and axes, right? Mm-hmm. It's very difficult for them to get a lot of the equipment that they need to really upgrade our grid, and it's becoming a challenge.
And so when if we understand we have to put this, we have a lot to do with the existing grid, and then I think kind of the next logical point to explore is, okay, for these new data centers that are going to go on, how are we going to power them? And I think it's wonderful. Obviously, I'm from Perry, Ohio. The power plant there has done an amazing job for my community that I grew up in. Employed a lot of neighbors, and it has been a blessing, right? To have to grow up there. I think that it's great that we want to put 10 new, bring on 10 new nuclear reactors or bring them back to life, right? We can't build them. We can't build them that quick. I think that's not the answer, right? That might be the answer in the medium term, bringing on more nuclear energy, which I'm certainly a fan of. But the reality is, if you're going to build a nuclear plant the way that we think about them, that's a decade process, and we don't build them as fast as some of our competitors, South Korea, China, some of the other countries that are doing this work. What do you think? As we start to think about how these data centers are powered, right? There's that idea of like a base load fuel. mean, a nuclear reactor can be a great base loading fuel, but we're a long ways away from being able to bring on more power that way. So how do you think about the base loading of the fuel as we start to create more options, more levers to power these?
Well, I think it's got to be an above all of the above type of solution, right? Okay. Where there was a long time vilification of fossil fuels. We've got to use fossil fuels, right? Mm-hmm. We've got to, and that's certainly a big resource. It's a very cheap resource and very plentiful, mm-hmm. right? But there's also renewables. Solar is a very good, a great source actually. In fact, in Texas, you mentioned ERCOT issues that they had 3 years ago, mm-hmm. 4 years ago. But they went on this like blitz building solar out in West Texas to help support the kind of power demand they need for another harsh winter or another really strong summer. And this last summer, they survived, right? They did well this last summer, right. But they saw that as they took an all of the above type of solution, mm-hmm. right? They do have some power plants that are coming in. They do have a significant amount of solar that's going in. They went the wind route, but I think something that a lot of I guess stakeholders are starting to realize about wind is that 1/3 of those wind turbines are not working at any given time, and they're very, very difficult to maintain. So they're starting to see that solar is a pretty viable solution. But I think the other answer, nuclear facilities are difficult to build. I think we're going to need to see some type of permitting reform, right, mm-hmm. with the federal and state levels. But I also see natural gas-fired power plants as also being a very strong source of this energy, right? We have plenty of natural gas out there, and doing a PPA with a natural gas-fired power plant, you have partnerships with, say a exploration production company here in Pennsylvania. Now they're transporting gas to Indiana. You put in a pipeline, or some of those pipelines are already in place, and you're just procuring the space in that pipeline to send your molecules down. All of a sudden, that gas power plant is probably a pretty viable solution. And don't forget hydro, right? There's still a hydro facility in West Virginia that's producing electrical, right? But it seems like, going back historical, we as a country have forgotten how to do all of those things. A lot of that infrastructure came in the 40s and 50s and 60s. And then now that we're in this stage, we're still using technology, the transformer technology, for mm-hmm. example, same technology they've had for 90 years. It's not been updated. Those things.
And I think that's, from an investment perspective, right? I mean, those are challenges. And I think the one thing that the United States has done over time, right, when we think about that, is being good at allocating capital to solving those problems. But I certainly think, kind of addressing the current grid and powering, upgrading that, powering it right now with an eye toward the future. And then I think the third what I worry about on the third end of it is kind of how we think about this idea of the hyperscalers, or kind of the AI companies doing their own energy, right? And kind of how we interface, how that interfaces with us, because we've never really had that, right? When we're talking about treating like this, Amazon as like someone that has their own singular PPA. Like, I don't know that's necessarily existed. Like, Amazon is a city into and of itself, and I think that how we think about that and the impacts, right, to our communities, I think that's certainly something that we've never really contemplated it before, and that's anything that's new, right, is going to be a hurdle.
Very much so, and I'll tell you from personal experience, I've been working on a rate case recently mm-hmm. for a utility, and we had to attend public hearings, mm-hmm. right? And that's open to the general public. People can come in and speak their mind to the, mm-hmm. The state public utility commission and the utility, et cetera. And I would say 90%, 85% of the people that stood up to speak, their biggest fear was the AI data center. Mm-hmm. How much power AI data centers were going to utilize, what that was going to do to their rates. There was definitely a very real fear that their rates were going to increase significantly as a result of these AI data centers. But I do believe these hyperscalers are cognizant of that. And that's why that behind the meter becomes so attractive. Mm-hmm. Because one, you have like the announcement from Google saying, hey, we want to try to be grid neutral. All right, we want to utilize the grid and use the resources that are out there, but they also recognize the risk of doing that. There is risk. It's not 100% reliable. But then if they have something behind the meter where they're supplying, they're getting that energy that they're producing themselves, right? They're getting gas from an EMP company down the road, and they're producing that energy. Now that demand is that load is less. It becomes a lot lower. It allows that data center to be open 24/7, 365. But also it really helps soften, or I guess dampen the increase in rates to the ratepayer. Now, me being on this side, I kind of see how all this mechanics are working, so I'm not so much worried about my rates. But for Joe Q public that isn't familiar with it, okay, it's legit, it's a fear. It's definitely their feelings are real, but I also don't think they have the full story on what is also happening to help mitigate that from happening.
Before we go to Q&A, I think there are two other items that I want to explore. And obviously, just because we talked about deglobalization and moving things back to the United States, whether it's producing semiconductor chips to, again, the component parts for all of the transmissions and the transistors that allow us to electrify this grid and make sure that the lights turn on at Heinz Field and PNC Park and also.
I'm glad you called it Heinz.
Sorry, Acrisure. I'm a Browns fan. It's no matter what, my team loses there. So whether it's Heinz Field or Acrisure Stadium, you can be sure that the Browns are likely to lose. Hopefully, this is our year. We've been saying that for a long time. But I think there's only going to be 2% entertainment.
Yeah, that's a 2% entertainment right there.
But I think the other just because we're talking about kind of moving things back to the U.S. or just creating more of a balance, really, we're still going to be interconnected with our EU neighbors, our European Union neighbors. I think one of the challenges we face is that from a regulatory perspective, we have very different rules and regulations, and if we're going to be processing any EU data, there's a lot of hurdles there from a legal and regulatory perspective. How do you think about this is obviously very much evolving as we speak, but that's an area where as you start to get kind of less connected, that can still present issues.
It definitely presents issues. One, we have issues just connecting to Canada and Mexico, and even though we try to talk between the three countries about regulatory harmonization, and that's when we have pipelines crossing borders, right, and we have electrical lines crossing borders. But you're right about the EU. They have significantly more rules regarding privacy, right? And so when you've got privacy regulations in the EU that don't exist here in the United States, now a lot of these data companies that do a lot of this data collection, because that's really what AI, these hyperscalers are doing, is they're collecting all of our information.
Training the model.
Training the model. That's right. Now they've got to be very careful about where that data is coming from, right? And how is that data going to be processed, and is it going to be processed different? And so, of course, just that segregation of user is going to create, another source of demand for energy.
And the last, I think this last item is both, I think, an opportunity, and I think we don't have enough of it, but I certainly think that we can get there. Is this idea of battery storage, and that goes to a little bit of behind the meter, because it's smart meters in our houses, but this idea of battery storage and the idea that when we produce this very valuable resource, right, this power, this compute, that we don't lose it just because we can't store it. And I think that is both one of the challenges for data centers moving forward is how fast can the battery technology evolve. When I think of battery technology, honestly, I think of Tesla, right? I think that was, I always kind of growing up, it's like the idea that you could, when talk about the Doc Brown, it's like, oh yeah, you get your, I think when I was 16, gas was 83 cents a gallon. I went and filled up my 1994 Ford Escort 5 on the floor at a Gulf station. And, I thought that, driving stick shift was that was the greatest thing. And that's what we were going to do. Then all of a sudden you fast forward and you get this you get a car with a battery, you know, it's battery powered, and you know, you plug it into the side of your house. Yeah. Battery storage, huge challenge, but also huge opportunity.
Huge opportunity. You're hitting the nail right on the head. Like, I'm amazed that we don't talk about batteries more. In fact, I'm amazed that batteries aren't more widespread than what they are. Right? Utilities are using batteries, especially for spurs that have a tendency to have more reliability issues, like big trees, things like that. They're using them in those spurs to help offset, like if there were to be a storm that knocks down power, at least those neighborhoods off that spur can still get power off of those batteries, right? So yes, batteries, one, it's a continuously evolving technology, but that technology is already here. You've got batteries that are the size of a storage crate. And I'm talking like one of those big Mayer storage crates. Right. You've got a company called Convergent, you know, which builds incredible batteries for exactly this kind of purpose. And they work with a lot of utilities for that. And, you know, so battery technology is certainly here. And, like, what's your perspective there? What are you hearing on the financial side?
Well, I think from my perspective, we don't have enough of it. When you hear about like how we're going to do this, and you look at the forecast, it's that batteries and storage and is the way that we are going to be able to solve for a lot of the power issues that we're going to encounter, right? That we just can't let this resource, you know, evaporate. Right. So it's not like a natural gas reserve that we've proven, right? We've proven it in the well, and when it's time to extract it, we extract it. Same thing with oil. Before that, it was, you know, coal. You know, back to take it to Standard Oil, and we're talking about kerosene, right? Yeah. You know, Cleveland. There we go. Shout out to John Rockefeller. So I think that. You know, I think that the battery is battery and storage is going to be a key, because I think that what it'll allow you to do is, you know, from the perspective of those, you know, those concerned citizens about, you know, the facilities. I mean, the battery, if you can store it, you can have a meaningfully smaller, you know, data center from a square foot perspective, from a footprint perspective, if you have more effective batteries that can store it. And I think, you know, that's an area of manufacturing. That's a skill that we're going to, like you said, like the lithium battery was created here, and then, you know, for a long time it was, you know, decisions were made about moving it toward, moving it towards Southeast Asia as a way to produce it. We're going to have to relearn those. We're going to have to relearn those skills, and I think that's the opportunity. You know, when you talk about from an investment perspective, I think it's exciting because, you know, there's a whole host of new jobs that are going to come from this, that, you know, that were, you know, young people and to an extent, you know, people that are transitioning their careers are going to get to learn something that's very new and very exciting, and similar to, you know, when we talk about like the 40s and the 50s, the people that were coming back from World War II and getting into those, you know, that industrial, you know, spike that happened when, you know, President Eisenhower, you know, interstate highway system, all the things that happened because of that. I do think that that's, you know, the exciting part is that we're going to have the ability to manufacture, to create manufacturing facilities, create a lot of jobs that I think are going to be help solve that problem.
Yeah, I definitely agree. And I think we'd be remiss if we didn't also talk about some of the efforts that the hyperscalers are doing to also become carbon neutral, right? Because you know, we've definitely talked about all of the different energy sources.
Microsoft has even said, I think they want to be like carbon negative.
Yeah,
right?
they want to go. So that's yet another challenge, but it's also an opportunity, right? For batteries, solar, all these, basically any company that produces a renewable energy credit, a REC, right? If you're producing a REC, you can take that REC, you can sell it on the market, right? And now you have another revenue source for the energy you're producing. So not only are you receiving a rate for the energy you sell, but you also have the renewable energy credit that you're also able to sell. And so for companies like, you know, like Google, Meta, et cetera, if they have this solar on site behind the meter, if they have that, you know, certain cogens, right, or even carbon sequestration, right, there's definitely a bigger push for carbon sequestration. There's, you know, looking for, you know, all over the country, looking for ways to store carbon, right, which provides you with an energy credit, right? And folks, you know, might ask, well, what exactly is an energy credit? I always liken it to this. I always say, Leonardo DiCaprio is flying around in his plane. He can fly because he buys enough energy credits to offset his usage, right? And so that's what these companies do, is they buy enough credits to offset the usage. And that's just a very simplistic way to look at it. But that's how it helps offset, right? It's like, okay, well, I'm either going to plant trees or support the solar project or support carbon sequestration or support X, Y, and Z that provides this alternative energy credit. And by doing so, now I've got these credits that we can produce.
Well, I think we've got about 15 minutes left. We'll go to we'll take some questions. Lindsay, if you could scroll down. Yeah, we'll take I think this is a kind of a two-part question. The question is, from the financial side, how concerned are you with the circular financing happened where the AI chip suppliers are investing in companies who then buy the products from the chip companies? And then the follow-up to that question is, are you worried about another tech bubble? I think from the financial side, it'd be hard to ignore the circular financing that's going, that's happening. I think that when you look, and NVIDIA just reported yesterday, and it was the best quarter that they've had. I think there was something like a $68 billion profit or revenue rather. So I mean, I think I do worry about from the financial side of things. For the longest time, for the last 5, 7, maybe 10 years, these large hyperscalers really drove the market higher, right? Because they made a lot of money and they didn't have a big footprint, right? They didn't have a lot of PP&E, right? They didn't have a lot of debt on the balance sheet. So their free cash flow could fund all of these opportunities. You had very low interest rates. A lot of these, the CFOs did, quite frankly, a wonderful job of refinancing out their capital structure, moving, maturities into 2040, 2050, 2060. And so that was a big reason for their success. But now they're spending hundreds of billions of dollars, and that has to come from somewhere, and it's not all coming from free cash flow, right? So they're putting debt on the balance sheet to fund these, and in some cases they're doing some off-balance sheet transactions that I think we all as an investment community need to pay attention to. But I think we're at the point where you're looking at how all of this spend is going to affect revenue. That, I think, for me, is what we're looking at. I don't think that the circular financing that's going on, you have to pay attention to it. But I do think that these companies are generating a lot of profits. What you have to worry about is, what is the spend? What is it going to generate? Yeah. And how is that going to affect? And so on the tech bubble, the difference between what we're seeing now and the tech bubble, in my opinion, is back then there were a lot of companies that weren't making a lot of money. Like there were no revenue, right? These were hopes, ideas, and now you're looking at the publicly traded market. These are companies that are making a lot of money, like kind of a shocking amount of revenue. And then if you look on the private side, these companies are staying private longer. Google and Amazon IPO'd at less than $1 billion. We're looking at potentially if the XAI, which is the AI platform, the SpaceX platform backed by Elon Musk, looking at Anthropic, which kind of has a lot of different investors, and OpenAI, they might go public at like $1 trillion market cap. These are companies that are making, that have you have some visibility into some of these revenues. So I would say that the revenue side of the equation, you feel better about than the tech bubble, but you certainly have to keep an eye on, are they spending the money the way they should, right? And it's not like they're perfect. Just because you invested appropriately, Mark Zuckerberg and Facebook bought Instagram for $2 billion, probably one of the greatest corporate investments of all time. Just because they did that right this time doesn't mean that every company is now going to spend well. And so I think I'm concerned, but also kind of excited about the prospect of what they could do. I would also just say that from an investment perspective, what we're telling clients and where we're kind of positioning things is, you want to have exposure in your portfolio to, and again, in our opinion, you want to have exposure to investments that benefit from the AI capex, but the revenue is somewhat either unable to be cannibalized by AI or is somewhat insulated, right? So if you can have exposure to AI, but also have some exposure to some of these other parts of the market that, quite frankly, were forgotten the last 5 to 7 years because we've been dominated by 7 names. So that was a really great question. I am concerned, but not. I don't think it's hit the point where you need to. It's a red flashing light.
So I'll give you my perspective and a question on this, because I think it's an excellent question. So I go to a restaurant, I might see 20 families in there, 20 families with 13, a bunch of kids. They're all watching Bluey. They're all watching Netflix. They're all watching Disney Plus. They're all watching. So when I see stuff like that, or, we're on social media, or we're shopping online, or we're drafting an email, AI's in play, right? And so when I look at that, how much we as the consumer consume, and how much we as the consumer provide our data, it's just going to that's going to help push that demand. So while it might be, and then again, and I want you to shoot me down if I'm wrong, right? If I'm thinking about this the wrong way. So if I'm looking at it that way as a consumer, is that enough, or is that activity, consumer activity, enough to prevent it from being a bubble like it was back when the .com bubble happened?
I think what will prevent it from being a bubble, and I think when I think of a bubble, I think, hey, our bonds can outperform stocks over a period of time, right? It doesn't happen very often. I think that how they spend this capex is going to determine whether they have it's very productive, or are these companies that are $4 trillion market cap companies, are they 3 trillion? Are they 2 trillion? Like, I think it's hard to say that name, because for a long time there were no $1 trillion companies. Now there's like 10. But I think from my perspective, that's the reason why you have to pay attention. Like, set it and forget it is not going to work out well when you're talking about this much money exchanging hands and being invested. And is it being invested appropriately? Going back to that excellent question that I believe was a gentleman asked about the circular financing, you're going to have to pay attention to it, because they're not spending $10, right? And I think that's a data center, to build a data center, it's like $10 million per megawatt. And then the chips to power it are another $20 million per megawatt. So it's insane. An estimated $30 million per megawatt. You better get it right, because if you get it wrong, so that's where that could
very
come
expensive miss.
Very expensive miss. I think this is we got a question. I think this is right up your alley. I'll read it to you so you can answer.
This my glasses.
This is great. My twin brother can't see at all, and I've got I don't have that problem. Good morning. This is from a landman based in Oklahoma City. Understand there's a growing need for data centers, and currently working kind of the Texas, acquiring minerals and mineral waivers for related projects. This person's encountering some significant pushback from property owners who strongly oppose having these facilities near their homes. From our experience, what is the most effective way to address concerns and help ease the fears as we move forward?
Well, I think the fears are legit, right? A lot of people feared solar. A lot of people feared oil and gas development, and a lot of people are fearing, AI data centers. I think for the AI data center, maybe it's somebody that's out in farmland and they don't want to see a building, right? And that's what will happen. They'll get a building or a warehouse or something like that. But I don't really, without really knowing what exactly their fears are. I know when I was listening to those public comments, it was really about, the fear was about rates going up, right?
Okay.
It wasn't so much a health thing, but there are folks out there that do believe that there's some health issues related to data centers, which couldn't be further from the truth. It's like us fearing a unicorn flying through this window, which is,
my daughter would be really excited.
Yeah, my daughter would be excited by that too.
Be thrilled.
But it's not going to happen, So I think it would really depend on what the fear is. We certainly don't want it to be dismissive, right? Because the moment you start getting dismissive with really anybody is the moment they really start digging in and pushing back. So I would say, maybe acknowledge the fear, but as a landman, there's not really a whole lot you do, or control that you have regarding a data center. And so I would just say, well, I hear you, and I'm sorry you feel that way, but there's got to be somebody you can call or
and I think that's where it comes with the footprint and kind of battery storage and all the things that we talked about. Can you make it smaller? Can you make it less intrusive? That's where small modular nuclear reactors come in. Can you create something that's not as big and onerous?
And I'll tell you that the role in a lot of hyperscalers and developers primarily, they usually have community outreach professionals that work on staff. They have government relations folks that work on staff. I'd probably refer them to them. That way they they can be cognizant of what the issue is, and then they can meet with somebody who can hopefully address the fears that are being articulated there.
So we got a few more minutes. I want to make sure we get to all these questions. So we have,
okay.
So we've got a question around, interstate pipelines don't have any excess capacity. They're going to need to be new build outs. Those are definitely expensive and time consuming, and subject to lots of regulatory risk. What's the solution there from an approval perspective?
Get a good lawyer. Go to a firm like ours with a strong FERC attorney and a good, solid understanding of both federal and state regulatory filings. Right? You definitely want to get that. The next thing you want is a good consulting company that understands environmental regulation and environmental permitting. If you're doing an interstate pipeline, chances are good you're going to need a FERC 7C permit, right, to get that pipeline put in. And then, of course, there's all of the right-of-way acquisition, unless you're going to co-locate a line in a already acquired right-of-way. But unfortunately, I wish I had a better answer for this, right? Because government moves slow.
Right.
I know FERC, they have a couple of new commissioners on FERC that are, I want to say, friendlier to the industry. Mm-hmm. And they're probably going to be more aggressive in their scheduling. But when you do have a FERC filing, you're really going to move about as fast as the government allows you to move. They're going to set the schedule. They're going to set really the schedule for everything from initial discovery on.
So we got two questions related to data centers. The first kind of is, new data center designs are reducing water consumption for cooling, especially in regions facing water stress. Yes, well, one, they are the HVACs in these facilities are, it's kind of one of those things that is truly remarkable. And I think a lot of that has to do, though, with these data centers are being put in places where there is access to the resources. Yes. And so I think that where there is constrainment from a water supply perspective, I think what the solution that a lot of these data center owners, operators are doing is trying to put them into places where they have access to the energy, where they have access to the water, and I think that goes and that brings in another regulatory perspective, like how do you procure water, right. And how much access do you have to reservoirs and things like that. But it's certainly, there are a lot of these that are a lot of these issues that are coming up that unfortunately we only have an hour. But I think that's a great question. The other one, I'm going to let you tackle this one. How should AI data centers be governed differently from traditional data centers, given the reliance on continuous model training, high power compute clusters, and real-time ingestion?
It depends. I would say govern differently. It would really depend on what their load demand would be, right? So traditional data centers, the ones that were early on, data centers have been around for a while. Yeah. But their demand was a lot smaller. If you take a look at what the rack was 5 years ago, the demand was it was tiny. It was maybe 10 kilowatts coming off a rack. Now we're looking at a rack, for 240 kilowatts per rack, times thousands of racks in this one data center. So I think it's really going to depend on scale, on how they would need to be governed. I'm really just talking about how the rates would be distributed, but as far as governance with environmental,
and I think that's where a lot of this stuff is. The answer to that question is it's TBD, in that these are constantly evolving. And it's a great question. It's honestly one of those things we're gonna have to stay on from an investment, an assurance, and 100%. A legal perspective, because they're constantly evolving. And it certainly is an excellent question. We got two more. This question is, how do you see AI affecting wealth inequality in society generally if forecasts regarding productivity and labor prove to be accurate? It's a great question. I certainly don't know that I have the answer to it. I think from my perspective, I think that humans have always been able to innovate, and this new technology is just going to create, something that, new industries for us to, new problems for us to solve. And I think that, I worry about that, but I also just have this undying belief in America and our ability, over the last 250 years to see problems, solve problems. And I think this is one of those one of those things that I think can bring us together as a country, which is there's going to be a lot of creative destruction, but I also think that that's going to create opportunities. We talked about the manufacturing of these batteries, right? We made them here and then we offshored them, and now they get to come back, new skills. And so I think government is probably going to play a role in addressing some of that inequality, and hopefully, hopefully my faith in America and humans to innovate continues to be rewarding. The last one we have, and before we leave, is thinking of data centers that are generating their own power and operating behind the meter. What are the opportunities for E&Ps to supply gas, and what do those gas and power purchasing agreements look like?
I'll tell you, I don't know who asked that question, but I'd love to talk to you. I think there's tremendous opportunity there. In fact, if you've got gas coming out of the ground, you've got a pipeline that's feeding a data center behind the meter, feeding a cogeneration facility that's also behind the meter. The connectivity there is probably going to be a heck of a lot faster than if you have to go through the interconnection route. So that's a quick answer, but there's more to it, but that requires a much longer.
And we'll certainly follow up with everyone that asked questions. Thank you all so much. Really appreciate it. Again, from Schneider Downs and Steptoe Johnson, on behalf of Dan, myself, and our respective firms, we just really thank you for spending this hour with us. We hope you found it informative. Certainly we'll be getting follow-ups from all of us, and we really hope to have a follow-up to this conversation, and look forward to talking to you guys. I hope you guys have a wonderful week, and we'll talk to you soon.
And give us feedback if you like this setup. This is kind of new webinar style for us, so let us know what you think.
Thank you very much, guys. Take care.